is Martin from seekedge, the channel for learning about trading and investing. Welcome to a new episode of the Technical Analysis Learning Series, and today we are going to learn the basic stock selection for the trading. How do we select the stocks for the trading? So let's get into and see. So as part of this video content, we are trying to look at what are the basic 9 things that you have to keep in mind when you are picking the stock picking. So most of the traders do not follow one or multiple of these. They skip it. Even experienced traders skip it, and that is the sole reason why a good percentage of the traders do not come out with profits, right? So these are the fundamentals, but something that we forget about it every time. So let's look at each of these in depth and then see how we can. This may sound very basic, right? So the beginners, this would be of great information to begin with, but for experience also, these fundamental parameters is as critical. So as you get experience, you get used to doing all of this 9 automatic, right? That's only difference. So what do you mean by segment and instrument? Right, so there are n number of ways that you can trade, right? So you have a lot of hundreds and hundreds of stocks listed in in either of the exchanges, BSE, NSE, or international markets, or so there are a lot of equities that are listed out there. You can trade currency, right? National currency pairs are traded, that is traded in NSE exchange also. Then you have commodity exchanges like MCX, where you can trade all the different commodities like oil, gold, silver, and all these things on futures, right? So these are all different segments. When you open an account with Brokerage itself, they would sometimes ask you to have separate procedures to open each of these segments. Sometimes all are combined, some of this, but so we need to identify which one is what fits in your capital, fits in your temperament, your psychology, and all of these things, right? So that has to be clear. So most of the time, beginners would move around this. They do a little bit of currency, they would do a little bit of commodity, equity, cash. Sometimes they would do it on cash, sometimes in derivatives. So you have to identify your forte, like which fits in you better. So just because somebody is making tons of money in the currency does not mean that it may fit in you, right? So initially you may need to spend some time understanding each of the pros and cons of each of this instrument, right? So for example, derivatives is very attractive, right? It's a speculative instrument, as per definition, right? Options may cost you little or may cost you a fortune, right? So there are risks associated with that, so you need to be well averse. As a beginner, it's always recommended to start with cash. Less capital, you can start with currency or commodities, and so the different things that you have to research upon before even selecting which segment, and which type of instrument that you're going to do the business with. So there has to be absolute clarity on this thing. Now when you come to trading styles, right? So this is again something that you have to experiment with all of these once, and then experience it with some paper trading or small amount of forward testing. You will have and back testing it on the charts. So different ways you can identify which ones fits in better. So breakout on trading is something that is, so all kinds of trading can be divided into either of these 3, right? It is either breakout trading or main support resistance trading. Breakout trading is like the price does not move much. The price would keep on going within a particular range for a long period of time, which we call consolidation, and then at some point in time it would have more buyers, more volumes would come in, and then the price will suddenly shoot up to the next level, or or probably after some time forming another range, right? So capturing that moment is what breakout trading is. So you would have to patiently wait for the signal to give you the confirmation that so the buyers are in there and the price is going to move. It may take weeks, it may take days, depending on what time frame. So that waiting act, or getting the signal, is something that it may fit into the psychology of some of the traders, while some others would like to uh, um, go for the mean reversion, or sometimes it's known as support resistance trading. That is like whenever the price goes and hits a resistance, you take the trade to short it, or whenever the price settles at a support area, or an area where the previously the price action was seen more, and then you buy in so that you go along, assuming that the price is more likely to move upwards after staying for some time on the support zone. So that is known as mean reverting, support resistance kind of trading. Another one is breaking out, right? You would basically be looking at a resistance zone and for a breakout to happen from there upwards, going long on that, right? Now the third type, which is the directional non-directional. So this is especially valid when you are using instruments like derivatives or options especially. So directional is you follow the trend, right? You So wherever the price is moving, you keep on trailing your stop losses, and and you move along with that. As the price moves up, you move, you move further down, right? So non-directional is, now you do not know where the price is going to move, right? But you know that the price will be in certain range, right? Between 100 and 150 is what is likely to happen this week. So based on that, you would make a speculative bet, especially it's valid in options and derivatives, with the concept of decay of the time between the range would benefit you, within the expiry of the contract. So some do not get accustomed to this decay concept. Some are breakout traders, or they always follow the direction. They're good at identifying the signal which says the price is likely to move this way or that way, right? So they are not used to choppy movements or sideways movements, right? So they should not go for no direction, right? So these are the different trading styles. So what fits you is something that you have to identify, right? Each has its own pros and cons. So breakout trading would be difficult to capture sometimes. The stop, sometimes it may be false breakouts, right? Bull traps or bear traps. It may go up outside and then immediately it may revert back. It may be an exhaustion movement, price movement. So there is a lot of skills that is involved there to identify whether it's a trap or whether it's sustained. So technical analysis skills are more required. Support resistance would be basically relatively more easier and less risk involved if you're putting a type stop loss, right? So this trading style identification is very important. So the next point is the time frame that you have, right? Something that works beautifully on a higher time frame may not work the same way that you're trading may not work on a shorter time frame, just because your psychology is not fitting into that. You are not able to capture the signals and follow the rules as per the system, because the time frame of your trading that you have selected is not correct. So but some others would have a personality that fits in for that. So whether you have to go and do the intraday trading, in the intraday itself, should you go for a trend following, or should you go for this is spelling mistake there, scalping, right? This is actually L is there. So we should go for scalping, whether you should go a few days of you take a trade and hold it for 3-4 days, and then when the price moves up or down, you come out of it with a tight stop loss at swing. Whether you, sometimes you may be buying the end of the day and then selling off the next day, or you may hold it for a few weeks of time, right? Depending on the weekly time frames or the monthly time frames. So it all depends on your capital, your risk management, your appetite, risk appetite, and many factors. So this also has to be considered before you pick up any stock for selecting, right? Without knowing all this, Most of the time what happens is trade selection is based on some tip that is seen somewhere. It doesn't work. Now, this is the most important aspect when you are, when you're already aware of some of the parameters that we talked about. This is the most critical approach. There is a top-down approach of the stock selection, right? So you heard somebody, talking that that stock may be good, it's likely to move. Don't go for that. You don't to fail or lose money in that, right? So the right approach is for identifying what is the market doing overall, right? Overall the market is doing this month or this week or this day or the last one few days. How is it doing has to be identified. How do you identify that? You have to look at the market index. Index is a collection of the top performing stocks that is put in there. So how is that performing gives you an indication that how is the other, in a broader sense, how the other stocks are going to perform is can be clearly understood from that. Now, after you have identified, okay, the market is in a trending up move or a trending down move or a sideways movement. So after you identify, the next important thing is what are the different sectors, that are involved in the market index, right? It could be oil and gas, it could be FMCG, it could be metal, it could be information technology, it could be different sectors, real estate or anything. So the money that the big boys are putting in the stock market, they keep rotating that across the sectors, and the money keeps moving across. So what sectors? It's not just the sector is not good, right? All sectors will be performing at 100%, but it's cyclical. So you need to identify at the point in time when you're going to trade, when the market is in this particular condition, which are the sectors which are performing. Identify those stronger sectors, and then in that stronger sectors only, we would be picking the strong stocks or the strong instruments. Using the strong instruments, we'll be trading only in when the market is long, we'll go long. If the market is going in a downtrend, there is no point in selecting a stock in a strong sector. When the market go along with the market is moving up, then go for strong moving up sectors, and then that strong moving up stocks. So that's the way it has to be. Strongest among the strong is the only thing that you have to pick up. This is the most important critical aspect. Now, next one is identifying the risk management. How much of risk that you are, ready to give away is not what the point is. No, I have 10 lakh up till the 10 lakh is gone. I will keep trading. Whether it takes 1 month or that is not how it has to be approached. The approach has to be, right, I am going to take a trade, and for that trade, what percentage of my total capital can be risked? That means I am ready if that much of money is gone, I lose this much money, right? I'm ready to risk that much of money to get a reward of this much. This has to be very clear. How much of quantity or how many lots of options or how much quantity I am going to buy has to be very clear as per how much percentage of your total capital. 1 crore, 1% of that comes to how much is what you would maximum ready to lose or risk upon for one trade. This varies. Some of them it may be 1%, maybe small if their capital is big, or it depends on how big or small your capital is, right? So do not put all your eggs in one trade. One trade you should have a clear definition. This is the maximum, right? And do not try to think that all the trades will win and then you will ultimately make money. It never happens, right? So right. So your win rate may be less, but what matters is whenever you're winning, you win more than what you lose. Then that is how the stock market fundamental thing works, which is something that you have to understand, and then be ready to accept the losses. But how much you should be ready to accept losses has to be very clear depending on your capital. This is very critical. Now comes to that. So after you have gone through all this, you knowing your capital and what parameters do you select? Obviously you are trading using technical analysis, means you should in technical analysis itself is an ocean. There are n number of, you have the wave theory, Elliott waves, Gann theory, then n number of indexes, indicators, parameters. So you go to trading view or any platform of a broker, you can learn about n number of things, but fundamentally they can be arranged this way, right? Trade selection basically can be, you can trade based on any of these parameters or some combinations of this, right? So you may have several indicators doing the same thing. For example, momentum indicator has got RSI, stochastic, all of these are doing the same thing. They are all capturing the momentum. Now which one is the best? You will have to trade, paper trade, and see which one works for you. And all of them essentially is based on some formula that is applied on the price, right? So it could be momentum, the acceleration, of the moment of the price, right? Or it could be price action patterns, like how the price forms a flag pattern, or a doji pattern, or a swing low high, higher high, higher top, or an open is good high pattern, or a ORB. So there are n number of price action patterns which you can easily learn from any technical analysis candlestick patterns book, or online content or videos. You can get all this information. So it can be based on that. It can be based on momentum. It can be based on trend. Trend can be there, has got n number of indicators like ATR, super trend, ADX, and so the different indicators have there. You have to identify which are the trend indicators. So so sometimes you may want to know, I will trade a breakout based on if the trend indicator gives this signal plus it gives the momentum by the momentum indicator, or you can rely on only one trend only. It depends, but the fundamental things are momentum, trend, price action pattern, volume, volatility, support, resistance, and the sentiment. Volatility, some people trade only on volatility. There are some traders in options. They do the option strategies during the earnings time, and then when there is a volatility crash, they would in the stocks also you can identify the volatility expansion and the contraction based on indicators like Bollinger Bands, right? So whenever there is a volatility contraction, you can see the skews, and then that could give you a signal of a breakout, right? Support, resistance, there are n number of indicators, and things like pivots and pivot levels, and CPR and all these things, which gives you where is the price action likely to take a resistance or a support, right? So depending on that, you take the trade of a mean reversion. It's possible. Sentiment analysis is based on the events. Um, so this is not of so if you're experienced to get a sense on the sentiment, then you can trade that way. So essentially you need to be clear what combination of all of these parameters, or what single parameter that you are using for trading. This has to be clear cut, defined, back tested, or paper traded first, so that you get the confidence to proceed. That this not having the parameters clear is why you are struggling to so this is also, there is no other parameter which is beyond this. Whatever trading selection that you're doing, it will be based on one of this. It will fall in one of this. Same in the case of any instrument you take risk management is the same, right? Any market or exchange or any tool that you go, this is the same, right? Currency, suppose you're going, you would have a mother currency, USD, dollar. Dollar will have an index, right? So oil, you will have an index, right? So in that, so this split going up from the top to the bottom is common, right? Time frame is it's common. Selecting whether you want to go for scalping or intraday or a swing, it's common. Trading style is common. You use any signal or any tool, any instrument. These are fundamental common things, right? Next one is to shortlist the watch list, right? So when you are shortlisting, you have to be very clear. You can't shortlist 100 stocks for an intraday and then sit in front of them and watch for the signal. It's not possible. A shortlist should not have more than 10. Max, you can be cut down to 5. That's best. How do you come out with this 5? You just have to go to the charts manually, right? Select all the future stocks are likely to have more liquidity, and then see the charts, and depending on the parameters, the risk the trade parameters, you identify those, and based on momentum or trend, and identify those stocks manually from the charts, and then narrow down the strongest among the strong sectors in the strong market if it is long, and shortest among the short, weakest among the weakest if it is a weak market, right? So that is how you have to approach. So there are two scanners like Chartling and Topson. The links for that is given here. Now where they help you have the scanning process done automatic also, instead of you going through the 170 or 200 futures, nifty futures stocks one by one. You can put those conditions in these tools and then quickly give the parameters so that you want to check for momentum or trend there without any difficulty, and then get to select the 5 or 10 stocks that comes into your criteria. So narrow down to the smallest as per the tightest selection criteria that you can do, and then put that into your watch list and focus only on that 5. Right? You may be tempted to listen to the channel or tip traders or tip givers or n number of newspapers or blogs or Twitter traders and all this. They will be giving. So that should not bother you. Your selection of the stock has to be your own, based on your understanding of the market, not another person's understanding. It has to be based on your analysis, your confidence, your trade plan. So if that is the primary reason why people fail. Right? Somebody has told that this stock may work. So I do not know. It is not my own analysis. It is somebody else's analysis. You trade, then you will fail. Right? You will miss. Right? Instead, right? Identify your own parameters and scan your own, and then get your own work. Right? Those steps. No. So that's why. So when you say doing homework of shortlisting, once you have shortlisted say 5 stocks, the only thing that you have to do is, for this, what should be the entry, exit, stop loss. So most of the times, without knowing this, blindly people enter the trade and then go panic when it reverses, and then somehow somewhere it comes out, and then it did not get stopped out, and then you lose big, and then you're flubbed with the market. That's the point. So do a proper homework of selecting based on the criteria that we have discussed, the parameters that we're talking about. Then have a trade plan. Trade plan is not any big, engineering plan or any large plan. It's very simple. What price I'm going to enter as per my trade parameter signals. What price I'm going to enter, what price I'm going to exit. That is stop loss. Right? How I book profit, how I will trade. That's again stop loss. Right? When will I enter based on the signal? When will I exit? And what is the maximum risk that per trade that I'm going to take in case my plan does not work? What is plan B? Right? When will I re-enter? So this, if it is done for all of these 5 stocks, and if you don't get any signal on 5 stocks, not trade. If you get signal in 1 and it did work, good. 10 work, not trade. If no other signal is there for the day, next day. So if you do this consistently, then you are into systematic trading, and then you ultimately win. That is what the secret of trading is all. Right now, signal generation, signal. So once you have the stock selection done, the scanning done, you on the live market the next day, these signals get confirmations, right? So if you are saying, if you have a momentum that has gone above 60, but you still want the entry to happen only after the price moves above the previous day's candle. So you need to get live signal alerts on the trade, on the trade when it out. So that can be set. We can set alerts in many of the broker provided tools like Sentinel, or Sensible has got alerts, WhatsApp alerts, and even ChartSync has got so there are hundreds of trading tools and broker tools that gives you a mechanism to set alerts based on price, as well as based on some of these parameters that we talked about, like trend and momentum and all that. Right? You can also have algo trade, entry alerts, entry automation also can be done by tools like TradingView, Ami Broker, TradeCon, and many n number of algo tools are there. Without any coding, also you can do the trade automation by triggering an entry based on the parameters. So this is very much possible, not a big deal nowadays, right? That is all. This the last part. The first part would be to do the homework, right? So let's just summarize on what we picked up, right? So these 9 parameters will help you become an independent trader without relying on somebody else's analysis and your own analysis on it, right? You have to identify which segment, which instrument you are going to track. You should know which trading style, whether it's mean reverting or breakout or direction, non-direction, which time frame brand, the intraday, swing or weekly, BTSD, what is fitting for me, right? What is your risk management, right? And you have to do it in a top-down way. You would not simply pick weak sector stocks. You would pick the strongest sector among and the strongest stocks in that sector when the market is strong, or vice versa, right? So you would do that. Is a top-down approach only you will trade, and then you would have defined parameters, whether you trade on volatility, whether you trade on momentum, whether you trade on which particular trading parameters. You have listed 4 or 5 of them, so that has to be defined. And you do the shortlisting beforehand and not while if the news channel is showing something. You would not trade that. You would have the shortlist and the homework done before that, and then you would have an entry, exit, stop loss defined before you end up, and you would also try to reduce the effort by probably using some automated alert signals that tells you to go, depending on whether which trading style that you are using. I hope this helps, and then it helps you become a better trader. Please, if you like it, please subscribe it, and if you're not done, and also share it to all of your friends so that everyone benefits from it. And it does not cost you anything, and it will keep us motivated to continue coming out with better videos next time.